In this example of stock options, the diluted EPS of $2.29 was calculated as per the method suggested by accounting standard. Accounting standard suggested that try to calculate the diluted EPS towards the end of the year and ask yourself what would have been the EPS. In this case, what would have been the EPS if 2 lakh stock options were converted at the start of the year? Well, in that case, your numerator, which is net profit after preference dividend, 24 lakhs would have stayed the same. Now, this information is given to us. However, the number of shares outstanding, which is the denominator, would have been very different. There are only 10 lakh shares outstanding in reality. But what would have been the number of shares outstanding? Here's what accounting standard is suggesting. Well, if 2 lakh stock options were converted at the exercise price of $15, one is there would be existing stock of 10 lakh shares. Now that's given, but there would be additional 2 lakh shares because 2 lakh stock options would be converted and everybody would have paid $15 per share. So the company would have received $30 lakh or $3 million if they were converted. So now the total turns out to be 10 lakh shares outstanding plus 2 lakh additional stock if they were converted. But here's an additional assumption which the accounting standard makes. The accounting standard says that the company will take this $30 lakh and go to the secondary market, Bombay Stock Exchange, New York Stock Exchange, and buy back the shares from the other existing shareholders at of course, the market price. So the average market price, as for the example, is $20. So they would have bought back every share worth $20 from other existing shareholders, and they would have bought back close to 1.5 lakh shares. And that would have reduced the number of shares outstanding. So that's why minus 1,50,000. And the total turns out to be 10,50,000 shares. But here's what is not there in any of the books. The question. Now you could have this question, and you must have this question on why are we assuming that there is a buyback. Now accounting standards are accounting rules, and rules are either based on logic or some precedents. Here's both. In reality, the employee stock options, whenever they are converted, the choice of when to convert is entirely dependent on the employees. So the employees may decide to convert today and may decide to convert later point in time. Now, whenever they convert, the company ends up receiving the money. Let's say, for example, in this case, $30 lakh. So when the company ends up receiving this $30 lakh, the company management may use this $30 lakh for the business purpose, but at times the company already has good amount of cash. What do they do about this additional $30 lakh cash? Well, in reality, what they actually do is they take this $30 lakh and they go in the secondary market and do the buyback. This is what is the market practice even today. They buy back the shares. Now, why would they do that? Well, here's the two-folded advantage of buying back with the money which cannot be used anywhere. Let's say there is Mr. X who holds 1 lakh stock before the option conversion. So before the conversion of the option, the percentage stake of Mr. X is 10%. How do you get 10%? Well, in this example, 1 lakh divided by 10 lakh shares. That's how you get 10%. Now, this was the stake of Mr. X before the option conversion. What is the question? Why does the company do the buyback? Well, one of the reason is if they do the buyback, the dilution of the stake is contained. Here's how. I've created two scenarios. What if the buyback is done and what if it is not done? Well, if the buyback is not done, in this case, what happens is now the denominator, there are 12 lakh shares and the stake of Mr. X will fall from 10% to 8.33%. But if you do the buyback, the stake of Mr. X will fall from 10% to just 9.52% because the denominator is 10,50,000 shares. So the dilution of the stake of the existing shareholder is contained. And that's why even today, when the companies have additional cash and they cannot use it for the business, they end up doing the buyback. Another reason why they do the buyback is cost of equity increases, but even that is contained. Think about it as dividend. If you know cost of equity is a concept, wonderful, but think of it as dividend. Instead of giving dividend to 12 lakh shareholders, give dividend to 10,50,000 shareholders. Here's the reason why they actually buy back. So the accounting standard also makes an assumption. So the accounting standard is not making a hypothetical assumption. It is very close to what is the market practice. Always find that answer. But first, ask the question. Another question is, why is the name of the method treasury stock method as per US GAAP? Well, it's very simple answer. In USA, whenever the stocks are buy back or bought back, those stocks are referred as treasury stock, and hence the name of the method is treasury stock. And lastly, if you noticed, when we do the buyback, it's an assumption. We did not take the current market price. We took the average market price during the year. Why? Because it's a what if EPS. How do we decide the day it is buyback? I mean, which market price of which date should we take? And that's why what we do is we take the average market price during the year. This is exactly how I teach. I don't impose the formula on my student. I construct the formula with them in the classroom. Why there is plus sign, why there is minus sign, why it is multiplication. I try to dig out the logic behind that concept. But here's the question, why do you need to know the logic? Just mug up the formula, get that degree and get done with it. Well, here's the thing. In reality, your qualification will get you your job, will get you a business. But for you to grow in that job, for you to grow in that business, you need to reason, you need to ask questions, and most importantly, you need to find answers to those problems. That is what helps you grow. So while you are at it, getting your qualification, why not try to build that personality which will help you forever in your lifetime? And if you really like this type of approach, then you can please like, share, and subscribe to my channel. But if you want to learn this approach, why not see me in that classroom? See you then.